Okay, so we're gonna have a quick lesson on time frame alignment since a lot of people were asking. Um, they don't know it, they don't understand how to get entries. I always get questions about what's the best time frame. Me, Dom, Powell, you always get that question, and you'll always be met with the same answer. Time frame alignment, time frame alignment, time frame alignment. Now, what is time frame alignment? Time frame alignment is using this in order to enter. Now, if I were you, I would completely discard this. You don't need this for anything. So, you only need this if you want to scalp, if you want to do everything else. This is what you want to do. This is what you look at. Today, we're going to be looking at some examples since none of you know how to apply this. It's all range based on premium and discount, and you can start from there. First, you can identify the range that you're trading inside of, right? So I'm gonna take you through examples, and you'll need to find it and try to experience the same things for yourself in price in the future. So let's take, for example, last week's PA. Can we do that for every delivery we have? Um, let's see. Let's see. This candle's right here, this candle's right here, and then I'm gonna. Right, let's do this in both time frames. Right here, and then let's get rid of all the indicators. And we should have something like that. Okay, great. Yeah, these eyes don't get swept. Great. Let's start with Monday, for example. Right, Monday. Okay, I'm not mistaken. Let's start with Monday. So, as you all can see, we've been in this range, right? Ever since we started February. So, you just identify range high, range low, whatever you're trading at the time. If you want to keep it even more simple, you can just trade the current leg, right? So, if the current leg overextended short, you can take this as a range, right? So if you're looking to short, you will look for a discount of the range. I'm gonna keep it simple, I'm not gonna confuse you. There's certain ways to connect premium and discount, but this should be enough for this example. So, if we're looking to short, we're gonna look for a PD array within the range that we're trading in discount. So, I'm not looking to short here or anything that's involved here because I'm looking for a PD array that's relevant within the range I'm looking to trade. Now you can look to scale to the highest time frame you want and look for the PD array that you want to trade. But here at the time, Monday, there wasn't really anything except this daily order block. But if you want to keep it simple, I would much rather trade into a gap than to trade into an order block. So the gaps help you. So, because we're very smart, this is the one of the FEG, right? Right here. You can consider this one right here for the delivery at the time. So we do get a tap into this, also the inverse, and we also have a 4-hour breaker that it wasn't left untapped, but it's still here, so you can still have it this, whatever you want to choose, either the breaker, which is a good invalidation point, or the FEG. That is up to you. But for the sake of this lesson, we will use this. Now, following time frame alignment. Did I delete the stupid text? Doesn't matter. Following time frame alignment, we can put it right here again. If we have a 4-hour PD array, we need a 15-minute entry. Scale down to the 15-minute. Identify your POI, and there it is. We need a 15-minute entry. Now, what could that entry be? This is where your own entry model comes into play. You don't need me or anyone else to tell you when to enter this. You decide. I will show you some entry models you could have taken from this. Entry models that most people would have traded. The first one being, if we're just purely basing this off of the 15-minute, then we would need, in my opinion, and in most of you guys' opinion, a strong close or CISD formed, for example, right? I personally wait for a breaker to get formed, which is old order block getting inversed. So this whole leg is an order block because we get this series of bullish candles close above the high right there. So I only wait for the order block to get inversed. So this would not be a close that I would take because this wick isn't closed below, so we don't have an order block to the downside. So I wouldn't really get the trade, this retracement, okay? Breakers usually don't react like this, even though this respected the range because of OTE right there getting respected, okay? Let's start by showing, I'll show you the entry I would have taken, but let's start by showing the entries people would have possibly taken. First, there's inversions, which people wait for a gap to get inversed. So here you have like a bullish fair value gap, right? And here you have another one right there. You can overlap both, right? Because we just get that. So you can overlap both, and I think inverse FEGs wait for the close. Some wait for the retest, some wait for the don't wait, there's just market enter after you get a body closure below and then put this up at the high. Target whatever, like 1 to 2 or whatever, right? That doesn't matter. I'll tell you just ways you could have entered right here, right? If you deemed this order block close or this as a breaker structure, which I don't. So, but you'll probably see people enter at the what you call the balanced price range, the BPR. You'll see people enter at the gap. You'll see people enter at the inverse. You'll see people trade this as a breaker. Now, we're not taking the stop size as an issue here because we're just showing you PD array getting traded into, scaling down because it's a 4, so we scale into the 15, wait for entry trigger on that time frame and trade aligned, right? So my entry right here would have been, I mark this out, I wait for a strong body closure, which happens in, let me, not this, oh, yeah, arrow marker. It happens in this candle right here, right? If you want to be extra careful, you wait for this one to get close below. But this one would be enough, just to not confuse you, right? So you'll see that after we get a closure below this, there is, if you mark out the breaker, you can mark the body or the wick. I don't really care. You do whatever you want. But if you overlap this, with the first gap that overlaps the FE, here there's nothing, right? But if you look, there's a tiny, oh, here there is a tiny 15-minute, right? And I didn't rehearse this, I'm just showing you PA from last week, just showing you how to approach this. There's a 15-minute gap, and the only thing you need to do, mostly breakers act like this. You find that hot zone within the breaker, and then you can do whatever you want with it, even though it's a very, very tiny FEG. I'll probably set my stop like where it doesn't make sense for price to come back into, and oh, where is that? Like that doesn't make sense. Blah 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 blah. Right. Usually, what I do is go into ranges, and I'll see what's mitigated. Obviously, this is mitigated, and then we'll extend this, get EQ. The only thing that will scare me a bit is that this wasn't mitigated, but I can't really tell if this candle already did mitigate this range, and I would have to go back down into time frames, which I'll do for the sake of you guys. But I don't want this to confuse you. I wanted to keep this simple, so it would be best if we can do that. Now within this range, I don't see. Oh, this is the retracement. So we start seeing displacement lower. So we see that this range wasn't mitigated here. It wasn't mitigated here. Here it wasn't as well. So right to our entries, discount wasn't mitigated. Now, one thing that can this has to do with market maker model delivery. One thing that can happen is breakers usually will give low risk buys, and low risk buys will have good reactions. Because this FEG is so tiny, this could act like a good invalidation point. But I was just trying to show you the difference between a confirmation entry from another entry model that, for example, would take this breaker as soon as we close below, and we have like one body closure below. But here there's no real strong close, and I like to see them because after that happens, we usually get the retracement into the breaker, but just a tiny tap, and then it starts delivering. So that's what I wanted to get to. But for example, you could have entered there. If you're managing stops like reaction based, I don't care if you enter right here, but let's say you enter right here for the sake of realism, because most of us FOMO in, right? And then we put the stop at like 30 points, um, and we target like C of the range, right? C of the range. Let's say full range, because I want to be realistic. So it's still around 4R, right? It's also internal. Pretty good trade. And that just goes on how to scale into entries based on higher time frame PD rays. Now you can do the same thing if you're trading this time frame. So someone told me, how do I scale down into time frames so that I can get an entry? Another way to do this is you have 4-hour POI, you wait for a 15-minute shift. After you get a 15-minute shift, you find a 15-minute PD ray, and you do the same. So if we are following time frame alignment, then the 15-minute gives us a 1-minute entry, right? So we could look to see what the 1-minute does. Now, I don't care how you enter here. We could basically use, if we're sticking to gaps, this one, if we're sticking to breaker, this one. So I'll use the breaker because I think that waiting for this was the healthy choice. So let's see what going down to the breakers, this whole thing, by the way, but you can stick to this, or but I would probably do that. Um, Even though we're just interested in the tap and then zoom into the 1 minute, right? And on the 1 minute, after we get a good close below it, which would be only after this happens, you go into the 1 minute, so this candle right here, and you wait for an entry trigger. Now, what's the issue with scaling into like lower, like you have a 4 hour, you have a 15 minute, but then you want to scale into 15 minute to uh 1 minute, right? To trade even more zoomed in with more confirmation. Most of us would be exposed to getting stopped out more because this is like trading at end of day, so it's not really good. Number one. No, trading at Asia, sorry. This is Asia trading, so it's not really the best session to be trading, but I'll still try to see what we can do. So right here, myself, I'm gonna use myself as the example. I would wait for a close, strong close below the breaker. And the only breaker I see right here is this one. Now, you'll see that we do get a close below the breaker, right? But they're very, very, very. There's no displacement below the breaker, so I don't really like that. Now, this is when some would say that intuition, not intuition, discretion, whatever you want to call it, comes into play, right? Uh, Now, I would probably get stopped out because most of us, we have to consider that most of us always, almost always, FOMO into trades. So let's take this as a loss. And also that happens because we scale too, like we scale too much, we zoom in too much into the time frames. If we keep it clean, especially at lower probability times, it would be easier to trade. Nevertheless, let's look for a clean example, which would be the second tap. So we get an internal sweep after the close of the breaker. So we only get this higher time frame breaker validated once this candle happens at let's say 30, right? 30 gets closed below it. See, 30 right there. So this would be good for me because we are going into an hourly open, and there's also a macro. So here it's pretty cool. So number one entry would be because the swept. I mean, the most important thing to check right here is if we did get any SMTs, but I would need to get into Monday, Monday 2. Oh, March, yeah, that time 19. Oh, it's like right here, right? Yeah. Okay, let's zoom in. Okay. Do we have SMT? It's one of those, right? Yeah, it's one of the sketchy SMTs. So technically, this is an SMT, okay? But I would discard them. Because this one worked. Some of you might think, oh, it's okay to use, but it's not very high probability. Like I've said, this is not the best time to trade, but still, let's consider this SMT. So the breaker would now be this old order block. So the best entry for me at the time would be here. So I'd basically just probably just slap a limit there, and then put my stop like I'd have my stop here, but then I would wait for this to close above the breaker, and I would probably exit manually at 7 points, whatever the close of the 1 minute invalidation would be. Now for this, you can extend to either the same target as before, and the same target as before is C of the range, and as you can see, you can squeeze more RR if you have clear invalidation points. And this is basically what you do to get those time frame alignment to time frame alignment entries. Now this is just one example. If needed, I can make one more video like this, but as you can see, it's pretty simple if you know how to apply the steps. You've also learned that going into lower time frames may induce you into getting into the wrong trades because you're probably either way too zoomed in to trying to enter the first break of structure you see, because it's hard to tell when price is going to give you that entry or not. Or if you're in the higher time frames, you're going to be exposed to a bigger stop. And with that bigger stop, you probably have to get less reward out of the trade because you have to risk way less, right? It all depends on how you manage your stops in the end. But that's about it on how you apply time frame alignment into a chart. And if you have any questions about it, you can ask me. But this was fairly simple, so I hope this helps. And if you need more, just tell me.